Well, expect the unexpected when it comes to Dr. Rajan as he brings the bonanza, making your EMIs cheaper. It's now over to banks to cut their base rates. For consumers, existing or new, it brings in relief, but at the same time provides an opportunity to manage your home loans better. How? Let's find out from Adhil Shetty, CEO of Bank Bazaar, who's joining us for this discussion. Thank you so much, Adhil, for joining us here at Smart Money. First thing first, Dr. Raghuram Rajan's 50 basis point cut now, was it in expected lines or were you surprised like many of us?
I was pleasantly surprised. I think this is good news for Indian customers on all fronts. Now, the RBI's policy rate is at the lowest it's been in 4 years, right, which is 6.75%. And this is going to result in eventually home loan EMIs, car loan EMIs, personal loan EMIs reducing the burden both for existing borrowers and making it less expensive for new borrowers. So very pleasantly surprised by the good news.
Adhil, if you look at it now that with this 50 basis point cut that has come, we are almost looking at over a percentage and a quarter percentage for the year that the RBI has really looked at cutting rates. My question to you is that while we wait as to how banks really translate this cut and in terms of their cut in the base rates, so far, how has the scenario panned out for the EMIs that we've seen? What kind of relief would really come if banks completely translate this cut in terms of the impact on EMIs?
Right. So like you rightly pointed out, right, it's a two-step process. So the RBI has cut its policy rate. Now the banks will evaluate their cost of funds and then they will decide how to change their base rate. But let's run a sample calculation like you suggested. An average loan size is about 30 lakhs. Home loan tenors are about 20 years in the country. So a 50 basis point cut, right, if passed on directly to the customer on a 30 lakh loan over 20 years, roughly results in an EMI reduction of about 990 rupees. So essentially we're talking of about approximately 1,000 rupees less in EMI per month or 12,000 rupees in savings per year, which I believe is quite substantial for a home loan borrower.
Adhil, this also gives, one is of course the relief as far as EMIs are concerned, but it also gives the opportunity for consumers to manage their home loan better because you have competitive rates really coming in from different banks. You have the decision as far as tenor is concerned, whether you want to continue with your existing EMI and look at reducing the tenor. What are the options and the ways in which consumers can manage their home loans better?
Right. So the good news is once the base rate is reduced, the intimation goes to the customer and automatically your EMI gets reduced, and this is an automatic process. No specific action is required. The base rate cut will eventually directly flow to the customer. You don't have to apply or do anything about it. However, if one does have any excess cash, they always have the option of prepaying and simultaneously reducing the tenor of their loan while maintaining EMI steady. Now, when one has the option of reducing the tenor of the loan while maintaining EMI steady, eventually that results in a lower outflow of interest. So when one has the option of reducing a tenor, maintaining EMI steady, they should try and exercise it when they prepay. But I think for normal borrowers, the fact that the banks cut their base rate will translate the benefit to them. One thing also to keep watch of is if you're an existing borrower, just keep track of what are the new rates in the market, what are new home loans available at, and if you see a significant gap between what your current interest rate is on an older loan and what the new loan offers are, you might want to consider doing a calculation to see if you're better off by transferring your home loan, but that varies on a case-by-case basis, and we can discuss how one should review it.
And that would of course be my next follow-up question. If one is looking at switching of their existing home loans, the most banks are looking at being competitive and offering competitive rates there. But if you are in a situation when you have to look at switching your home loans, what are the key things that you need to look into before you take that decision?
Sure. So I think firstly, one thing to point out is the positive news is since the RBI and the banks have moved to the base rate regime, any base rate cut, right, should equally affect both new borrowers and old borrowers. So that's the positive news. The structure is such that benefit should accrue to both parties. However, I think that customers should always keep a watch out to see what the new offers are. There are two things to consider when thinking about refinancing a home loan. So one is what is the cost attached with shifting the loan. The second is what is the benefit which will accrue by making the shift. So in terms of cost attached, right, there is typically a processing fee in terms of getting the new loan. So you need to see what the processing fee is, 5,000 rupees, 10,000 rupees or something to that extent. Secondly, you need to see if your old home loan has a pre-closure fee. Most new home loan contracts don't have it, but if you have a much older home loan contract, you just need to review it to see if there's a pre-closure fee. But in summary, right, the cost of switching is both the processing fee on the new home loan and if you have a pre-closure fee on the old home loan. As far as the benefit of switching is, you look to see what interest rate you're paying on your current home loan. Say that if you switch it and it switches at a lower interest rate, and currently, prevailing interest rates are anywhere between 9.7 to about 10%, 10.1%. You see if the switching it will reduce your outflow of EMI every month, and then you weigh the cost against the benefit, and then you decide if you want to go through the process.
Also, Adhil, how critical would therefore be the kind of servicing your bank is offering, or your lender is offering? That also would play a critical role, isn't it?
So I think most services are quite standardized. I think Indian banks have good technology and they've really automated a lot of the monthly EMI payment options via ECS, monthly reports telling you what the standing position on your loans is. So I think most customers seem to be happy with the services the bank is providing them. But if you're thinking about shifting to a new bank, I think one thing to consider is not only the saving, but there's some additional documents which you need to go through. There's some additional applications you need to go with. So make sure you shift to a bank that you're comfortable with working with for the next 15 to 20 years. So that's something to keep in mind.
Well, my next question really comes from the fact that there is expectation that there will be some pause now in this entire downward trajectory that we've seen with regard to the interest rate. So therefore, keeping that in mind, the debate of fixed versus floating, where do you think and what should be the criteria based on which consumers should be deciding whether to go for fixed or floating?
Right. So a vast majority, right, over 90% of the home loan market in India is floating. And typically we recommend it as a good product, right, because when interest rates go down, the benefit flows to the customer, and when interest rate goes up, the customer will end up paying a higher EMI, but it's very transparent. It's tied to the base rate. So a vast majority of the home loans in India are done on the floating rate basis. That being said, there are a lot of bank offers there which are on a fixed tenure. Fixed also goes in various flavors. So there are loans which are fixed for 2 years and floating after that, fixed for 5 years. There are products out there which are fixed for 10 years. And I think the customer really needs to decide, do they think, rates are at a low level now, so do they really want to lock in for 5 to 10 years? But the broad guidance is when you take a floating rate loan, you get the benefit when rates fall, or you pay a higher price when rates go up, but it's a fair deal when you take a floating rate loan. Another question people always ask us is this a good time to go ahead with my home loan, or should I wait expecting that things will fall further? The recommendation on that, right, is that the really important thing is, have you found your property? Have you found a home you like? Do you believe that this is something which is an asset you want to acquire and hold on for a long time? So the decision really, I believe, should be based upon, have you found the right home to buy? Because when you sign up for a floating rate loan, right, yes, rates might fall in the future, but in the new base rate or the current base rate regime, the benefit of that rate cut should accrue to you also. So we typically recommend, don't hold off, especially when you're taking a floating rate home loan. Find the property which is, your property. Take your floating rate loan, and when rates fall, the benefit will accrue to you. But really focus on getting that right property as your most important decision.
All right, Adhil, as far as the other, loan categories are concerned, when it comes to your car loan, your personal loan, this is completely the decision based on, where the rates are and therefore what becomes affordable for you.
That's right, because personal loans and car loans tend to be fixed rate contracts. So if you're looking to sign up for a fixed rate deal, right, you probably want to see what happens over the next couple of weeks. Because now that the RBI has cut its policy rate, you will see some changes over the next few weeks. So if you're looking at a fixed rate loan, let the base rate decision settle, which should happen over the next few weeks' time.
What about the fixed deposit? Now, of course, we will see some sort of fixed deposits not really looking that attractive now. And what would your advice be to investors in that?
Right. I think that one must expect that if loan rates are falling, that the bank's fixed deposit rates will also fall. So I think if anyone's looking to sign up for a fixed deposit, right, now is a good time to do it before the revisions happen. I think fixed deposits are a riskless asset class. They give a certain promised rate of return. Customers should, in this environment, maybe also consider liquid mutual funds, which again are low risk but can give a slightly higher return. So it really depends on the risk appetite of the individual.
All right, Adhil, thank you so much for joining us here at Smart Money. Appreciate you guiding our viewers with regard to how they should be managing their home loan or things that they should be looking at and giving them answers to all the questions that will be there in their mind after this rate cut announcement. Okay, time for a quick break. To get our expert opinion on your finances, email us, call us, SMS us or tweet us. After the break, find out how to plan how much corpus you would need for your retirement or how to make early retirement possible. Keep watching Smart Money.
To get our expert opinions on your finances, you can send us your queries at smartmoney@btvin.com. You can also call us on 022 4098 7098. You can also send us an SMS. Just type SM, give a space, write your query and send it to 977 327 0010.